Meantime, in China, it's this very surprising move. Everybody, I think, was caught off guard by this. Why they do it?
They were caught off guard, but I think a lot of people would rather have heard that the renminbi was being revalued, but there you go. There is a big risk in China of a banking crisis. I mean, that's not overstating it, I think. Bank lending, the first quarter of this year, grew massively from last year, I think 70%. You've got to ask yourself, given that the economy is growing on average around about 10%, you know, where that money's going and what the levels of risk are. I would say they're very significant.
Does the timing of this surprise rate hike suggest anything to you? I mean, it comes a week after the G7 meeting, and it's 18 months after their last rate hike. They've been going at spectacular economic growth rates for quite a while now. Well,
China are getting better and better at timing these things, and I think the timing is exactly that. It's just after the G7. As you know, the G7 were pressing for a revaluation of the renminbi. They didn't get that. What they've got is a clear signal, once again, that China is committed to steady growth. The political imperative in China is that the Communist Party needs to maintain order and stay in office. The concern is that if there is rampant growth, and particularly if there is unmanaged lending, that there may be a crisis in the banking system. And indeed, there are signs that the level of risk currently for the loan portfolios in key banks in China is well above what many analysts would regard as acceptable. Once you get anxiety, then you start to find that a lot of people that have borrowed money are not actually terribly serious about paying it back. So it would not be difficult for things to go quite badly quite quickly. There are, of course, other implications to this rate hike. You know, the level of foreign investment in China is, of course, massive, and a significant number of foreign multinationals are funding their working capital now from loans from Chinese banks. So this will be seen in the not just the balance sheets but the P&Ls of companies listed in New York and London.
Simon, Ross here in London. Where is the overinvestment? In what areas? Is it housing? Is it steel? I mean, where is this overinvestment and the
well, there's been. Well, some of it's infrastructure related, but yes, I mean, there is massive industrial investment, and there is, of course, a massive amount of investment in consumer goods. People borrow money, buy cars, and the interesting thing is that often they don't pay it back, and generally levels of controls in Chinese banks compared to, say, their Western counterparts are extremely low. There is, as you know, a massive property bubble in many of the East Coast cities in China. You've got to ask yourself how sustainable that is. I don't know if you've been up there recently, but the level of building continues apace. Who's going to buy all this? And if they buy it, are they actually buying it to live in it, or are they assuming that they're going to make a massive gain on investment? Because as we all know, having been through a number of ups and downs in the property markets, that cannot go on forever.
Simon, it's Michelle here in the United States, where we are reading this morning the general interpretation of China's move on interest rates is that they are now more and more willing to rely on market mechanisms, as you mentioned. Let's talk a little bit more about what you said in terms of the exchange rate. Does that mean they're going to get closer to relying on a market mechanism to price the renminbi?
Well, I think that would be wishful thinking. I mean, as you know, I've talked about the revaluation of the renminbi on a number of occasions. They will continue with their BBC strategy on renminbi. I like to mention that because I'm on CNBC. Basket, band and creep, which means you won't get any significant move on the renminbi near term. I mean, yes, it's true they're getting better at controlling monetary mechanisms, but at the same time, and this is a very small interest rate increase, given the behaviours in China, I've got to ask, you know, what impact this is likely to have on borrowing, seriously. Is it going to affect lenders' decisions in the near term? I don't see that, frankly.
All right, Simon, thank you for joining us today. We'll be
You're
looking
welcome.
out for it as well. That was Simon Littlewood, president from Asia Now, joining us.